What's up guys, and welcome back to the channel. The EV market is really heating up again in the past few weeks and looks to have a huge future. So with so much focus now being on Lucid's earnings report due tomorrow and Rivian's IPO this week, a stock that has previously gone under the radar is now hugely in focus. Gores Guggenheim, ticker GGPI, is one of the most talked about stocks in the world right now across Discord, Twitter, and the #1 trending stock on StockTwits. I made a video about this merger yesterday. Gores Guggenheim is taking Swedish EV car company Polestar public. I made a video about this yesterday, check it out. And I'll go into further detail in this video. If you've been watching my channel over the past few months, then you will have seen the huge gains that we made recently. Over the past few months, we've seen 9x gains on ILS since my first ILS video. We've had 10x gains on Shiba Inu from the time of my first Shiba Inu video back in May when nobody else was talking about this. And in the past few weeks alone, we've seen AABB stock 3x from the time of my video in September. If you watch my recent Petrotech videos, I covered the stock a few weeks ago at only 11 cents, telling you about a potential buyout offer coming. This stock reached as high as 34 cents just a few days later, and even now it's a bargain at only 18 cents. The board of directors currently has an offer on the table to buy the shares at 74 cents per share. So what are you waiting for? Hit that subscribe button now and stop missing out on these huge money making stocks. Turn on notifications and find out about these stocks as soon as I make a video, instead of finding my video after the stocks have made huge gains. It costs you nothing, but it could make you a lot of money. This is not financial advice. I encourage everyone to do your own due diligence. Now let's dive into it. GGPI, Gores Guggenheim, went public with its IPO in March. Gores Guggenheim announced its reverse merger with Polestar. The Polestar deal will be supported by cash proceeds of around $800 million from Gores Guggenheim and includes a PIPE or private investment in public equity of $250 million from top-tier institutional investors. Polestar, backed by Volvo Car Group and Geely, also counts Hollywood actor Leonardo DiCaprio among its investors. Polestar is a global, pure-play, premium electric vehicle company based in Sweden with a mission to produce progressive electric performance cars designed and engineered without compromise. They say that they are design-focused electric performance car brand harnessing refined performance and cutting-edge technology. I have just come across this Seeking Alpha article. Gores Guggenheim Polestar merger should entice EV bulls. The SPAC, Gores Guggenheim, is merging with Sweden's Polestar in a deal valued at $20 billion. Unlike other EV companies that have gone the SPAC route, Polestar has an established business and the company has further advantages over rivals. Valuation is a concern, but the solid and intriguing story and the lack of enthusiasm towards GGPI stock seems like a surprise. Polestar is merging with GGPI and investors don't seem all that excited. GGPI stock gained just 4.7% on the news, so this article is from a few weeks back, just before Lucid really took off again and the EV boom was in full flow again. When CCIV announced its merger with Lucid, it ran from $10 to $57. In contrast, GGPI stock closed on that Friday at $10.24. Even with the heavy volume that the stock had, clearly the appetite for EV SPACs had dimmed. But the more negative sentiment towards the space may actually be creating an opportunity for Gores Guggenheim stock, which doesn't necessarily deserve to be lumped in with the other EV manufacturers that have gone the SPAC route. Polestar is certainly not a mature company, but it is far more established than the likes of Lucid or Fisker. Looking forward, there seem to be real and significant advantages to its model versus other startups in the industry. Certainly there are risks. This is being valued at $20 billion, but they still need to produce and sell a significant number of vehicles with ever increasing competition from rivals. Now this is something that I've spoke about multiple times on the channel before. When it comes to these new and emerging sectors, the EV sector is a very new one when you consider that Tesla is by far the most definitely the market leader and #1 company in the industry. They were founded less than 20 years ago, and they have only really taken off in the past few years. Compare this then with the rest of the automotive industry, with the likes of Ford, which were founded nearly 100 years ago. So when you have these new emerging sectors, there will be a number of new entrants to the market, but over time, only a number of these will succeed. Over the past 12 to 18 months, we've really seen Tesla take off. In China, we've seen NIO go from around $1 to over $60 a share at one point. That said, there's a lot to like here, and a far more stable story than most industry participants have to offer. EV bulls need to seriously consider Polestar, and even investors less optimistic towards the sector should be taking a long look. As a business, Polestar has two core differentiators. The first is that Polestar isn't pre-revenue. Polestar delivered 10,000 vehicles in 2020. 3 quarters into 2021, the company is estimating 29 unit sales and $1.6 billion in revenue this year. There's already a business here. Even if the business at the moment has some work to do, Polestar projects operating margins worse than minus 60% in 2021. Now, if these margins are concerning, just think about how many years Tesla was operating before they ever turned a profit. The second way which Polestar differs from other passenger EV plays is that the company already has a global footprint established. This is in large part due to its relationship with China's Geely Auto and Volvo Cars, and this is a very deep relationship. Polestar vehicles will be manufactured at existing Geely Volvo facilities in China and worldwide. The Polestar 3, a premium sports utility vehicle launching next year, will have some of its production located in Charlestown, South Carolina. That manufacturing reach has allowed Polestar to move into new markets, 10 so far with 4 more coming by the end of the year, and the company aims to be in more than 30 markets with over 150 sales locations. But investors in the EV do need to be cautious. The sheer number of startups and the flood of investment from legacy ICE manufacturers is going to create intense competition. Yes, the market is going to grow. Yes, subsidies are likely to help. And yes, many customers are going to switch from EVs from ICE models. But the market can only grow so fast, and the simple fact is that there are going to be passenger EV companies that fail. The good news for GGPI stock is that, relatively speaking, Polestar seems far less likely than its peers to be one of these companies. The outsourced manufacturing with Geely and Volvo also limits capital needs. Finally, the existing Geely Volvo footprint is allowing Polestar to get out of the market relatively quickly. Current plans suggest that 3 years from now the company should have 5 different models on the market. There won't be too many EV rivals that can say the same, providing a potential competitive advantage. There are only 2 pure play EV models with global reach, Polestar and Tesla. NIO and Xpeng for now are regional. It's worth noting here that NIO are now beginning to expand into Europe, through Norway and Germany mainly. It will be interesting to see how this plays out for NIO. With Polestar being Swedish, there is a Scandinavian connection. And the German market is surely one of the most competitive markets in Europe, with the likes of BMW, Audi, Mercedes-Benz and Volkswagen, to name just a few, all being German. In fact, Volkswagen announced big EV plans earlier this year that seen the share price gain about 20% overnight back in March. However, Polestar has a far lower valuation than any of those peers, as we can see here. But there are risks. First and foremost, the level of competitors which I just spoke about. Then many things can go wrong. A massive recall, battery or range problems, or simply a launch that receives a soft reception. Now, I don't agree with this for the simple fact that these are risks for absolutely every car company. Every car company has produced some model that has failed to sell as well as its other models. Every car company has had to recall cars at some point for various reasons. Usually it's not a major problem and just requires the dealership to replace a certain part, but it can produce negative PR. Think of Volkswagen with their emissions controversy. Tesla have had their controversies over the years. The manufacturing agreement with Geely does limit cash burn and provide a faster route to market, but it also depresses long-term margins. Gross margins are targeted at just 22% in 2025. Tesla hit 27% in the first half of this year. First of all, a gross margin of 22% is not bad. Yes, Tesla has hit 27%, but how many years did Tesla have lower margins than this? Just look at the share price over the past year at Tesla compared to the previous 10 years. The author here then points out some poor reviews for the Polestar 2. Motor Trend said it was a little disappointing. CarWow gave the Polestar 2 an 8 out of 10, while similarly giving it a modestly negative comparison to the Model 3. Top Gear assigned an 8.5 out of 10 rating. First of all, this is comparing a new EV company's car to the market leader's car. And personally, I don't see how a rating of 8 or 8.5 out of 10 are considered bad reviews. Let's not forget that Wards Auto have chosen Polestar 2 as one of 2021's Best Engine and Propulsion System winners, as well as this year's Best AUX winners, saying that the near perfect blend of the BEV formulation, Polestar 2 is a blast to drive, and say that this is one of the most intuitive, efficient, human-machine interfaces ever encountered in a car. The IPO price placed an enterprise valuation of just $20 billion on Polestar. The transaction will result in approximately $995 million of cash added to Polestar's balance sheet to go towards funding its business plan and future model launches. So to have nearly $1 billion of cash at its disposal will be significant. And Polestar price of $20 billion means that it is 3 times its 2023 estimated revenue and 1.5 times its 2024 estimated revenue. This is very favorable when compared with its US peers Lucid and Tesla, who have 10.8 times and 6.5 times of their 2023 estimates and 9.3 and 3.6 times their 2024 estimates. Now, this investor's presentation is from its merger announcement in September, so I have adjusted these figures to reflect the current price changes. Tesla was trading at over $1,200 before Elon Musk decided to crash the price with a huge sell-off. At that price, Tesla would have been 63% above the price in this presentation, or trading at 15 times projected 2024 revenue. Lucid at the time of this presentation was only about $24, so it is currently 75% above that price and therefore about 6 times 2024 estimated revenue. GGPI was trading at $10 at the time. Now this is up to $12.81. So that's a 28% rise, so the current price is still less than 2 times its 2024 estimated revenues, which is an extremely low valuation in my opinion. And this is reflected by Alec Gores, who said that the SPAC deal represented a great entry point into Polestar because GGPI was conservative in its valuations. This stock has got huge gains to make yet, and Polestar also compares very well to NIO and Xpeng, who each have market capitalizations far in excess of Polestar's $20 billion valuation. When it comes to projected growth over the next 4 years, we can see that Polestar is second to only Lucid on the annual growth rate projections. Now it's worth noting here that Tesla is the lowest of these, but that is because Tesla is very much the market leader. Tesla is the most established and is a leader in the EV sector. Lucid is due to publish its first earnings report on Monday and has only began its very first deliveries in the past 2 weeks. Over the next 4 years, it's expected that Polestar 2, 3 and 4 are expected key drivers of volume from 2003 onwards, mainly from the launch of the latter 2 models, resulting in significant sales increases. So guys, that brings us to the end of the video. If you've watched all the way through, please hit that like button, it really helps the channel out a lot. If you're new, hit the subscribe button and bell notification, follow me on Twitter and I'll catch you in the next one.